So our Did You Know segment today is going to be a little different. We're going to discuss how to pick the right lender. I like to devote my time to educate. That's something that means a lot to me. That's also the approach that I've taken in my business. That's the approach that I take with the families that I help. But I want to empower you with the right information, questions, and things to look for so that you can find the right lender. I am not going to dance around it. I would love to help you, and I would sincerely appreciate that opportunity. However, if you're not in my market, or if you are just looking to find the right advisor for you, I want to empower you with some really great insights so that you can be best prepared when you are looking for someone who's going to wind up and who should be helping you accordingly throughout every step of the process in purchasing your home in very good collaboration with your real estate agent and realtor partner. And for my real estate professionals out there, these are some great things to also take into consideration when you're entertaining relationships with lenders to refer to for the clients that may come to you. So first and foremost, as I mentioned, your mortgage advisor is going to be your greatest ally. They're going to set your price. They're going to help you understand budget. They may help you with some insight in market, but that's really the realtor's forte and that's their expertise. But they should be preparing you with knowledge, understanding, and it should be transparent in the process. So my first point, item number one, look beyond the interest rate. There is the old conventional wisdom of good, fast, cheap. It's the perfect business triangle. If something is good and fast, it won't be cheap. If something is fast and cheap, it won't be good. And you can kind of see how that goes. This also translates to mortgage interest rates. There are online lenders that offer extremely low interest rates, and that may work for some people, but you may not be getting the service. So you get what you pay for. And albeit we're talking about mortgage rates, and this is a commitment of 30 years, 15 years, 20 years, whatever it may be. But if you don't have the right support and the right partner and the right service, you may not close on that purchase and you may not close on that transaction. You may suffer injury to your credit from a credit inquiry for something that doesn't come to fruition. So that's why the interest rate is not the end all be all. And that's an important point. Underneath that, there's also closing costs. You should understand what the loan terms are. You should understand what that lender's costs are. You should understand if there's prepayment penalties. For my listeners in New Jersey, prepayment penalties are illegal for what's called covered transactions. If you are purchasing a primary residence, second home, or investment property and taking on ownership of the property in your own name, 1 unit to 4 units, prepayment penalties are illegal. So you don't have to worry about that. But in other states, if you're entertaining moving, prepayment penalties could be part of the terms. It's beyond the interest rate. These are things to check for. Whether there's a slightly higher interest rate, fewer fees may actually save you more money. So be considerate of how much a lender could be charging you. And then lastly, beyond the interest rate, make sure that the loan structure aligns with your goals. Secondly, I want to empower you with the smartest questions to ask your lender. So we're going to start off here. Number one, which programs are the best fit for me and why? You're going to want to ask this question after you've completed an application. I could tell you from my process of assisting families, without understanding what their financial situation is, looking at the credit report, looking at, their savings, what obligations they have, it's difficult to say because there's so many different programs. And with the right lender, their response should be, well, we have a lot of different programs, so it's best for me to understand your financial situation first with your application, and then we can proceed from there. Secondly, can you walk me through all the expected fees and closing costs? This should be a transparent conversation. This is a very direct answer that should be given to you after this question. Third, how do you get compensated? That's an important one. Will you be paying as a home buyer, or are they working off of a commission with the lender that they work and represent? How often will we be communicating throughout the loan process? Now, for me, I like to incorporate this as part of my conversation initially so I can understand what works best for my families and the clients that I'm serving. So sometimes I just will ask, how communicative would you like me to be? But if they don't ask that question, this is a great question to ask so that then you can have a proper expectation of the service that you're getting. This is the big one. That's why I'm leaving this question for last in this part. If rates change in the loan process, how will that affect my loan? Some lenders, I for one, we offer a float down. That means if you start your mortgage process with me, I lock in your interest rate. And then if interest rates improve, we are able to float your interest rate down to where the market is. There could be a cost involved to that, or there could not be a cost to that. It will depend on a case-by-case basis. This is not something that every lender is able to offer, so it's good to ask that question. That will also imply that you will have to negotiate the right time to lock in your interest rate. In my process, it's easy. I have a float down that I offer for my families and clients that I serve, so I don't see a risk in locking the interest rate. But as we've been talking about, interest rates are volatile. So making sure you make good judgment on that is an important factor. Third main point here, prioritize education, clarity, and transparency. Now, in 2008, we had the great financial crisis. There was a lot of laws that were enacted to create more transparency in our business, in the mortgage industry. That being said, though, unfortunately, that does not mean that it translates to 100% transparency across the board. So you're going to want to make sure that you prioritize education, clarity, and transparency. You're going to want to get an education on loan types. You're going to want to understand how credit, income, assets, all of these things affect you and affect the terms of your mortgage. Also, what to expect in underwriting. So underwriting is the part of the process where your loan is actually approved. And there's a person who's involved that will review your loan documents, your loan file, the property at hand, and then issue a loan approval and commitment. You're going to want to understand more about that process and what's involved in it. Fourth, I'm going to say transparency again, but I'm going to pair it with accountability. So you're going to want to have transparency and accountability. A great advisor is normally very upfront and responsive. They'll explain the trade-offs clearly without putting pressure on you to make a decision. They will own up to delays and changes, which can happen in the process. Unfortunately, but also fortunately, the process has many people involved, so that provides some protection and some iterations of continuity. But when you have a lot of cooks in the kitchen, you got to wrangle it all in. Sometimes miscommunications occur, delays occur that are beyond anyone's control. So just understanding that you're working with somebody that will be transparent about that and also take accountability and keep you well informed throughout that process. Lastly, when timelines are provided, you're going to want to ensure that the advisor you're working with sticks to those timelines. If they set an expectation to get back to you by a certain time, that's an important thing. I can say as a professional in this industry, there's nothing that's more important to me than making sure that if I've set an expectation with a client about a communication touch point, sending an email, getting back to them on their questions, that to me is almost life or death. I need to make sure that I deliver on that timeline. So that's something that you would tremendously benefit from in the process. Lastly, and kind of just as an asterisk to this section, check out testimonials. Testimonials should be available on a mortgage professional's LinkedIn, Facebook, Instagram, on Zillow, on Google. You can perform your research to make sure you're working with the right person. Major point number 5, make sure their approach matches your goals. This is a little bit of where like the sales element comes in, and you're going to want to make sure you're working with the right advisor in this process because they should be number one concerned. Their number one top priority should be understanding you, your budget, what your goals, hopes, and dreams are in the world of real estate, that is, but also feel free to share anything else. And then align themselves in what they are doing for you in the process to those goals. Is it buying, refinancing? Is an ARM product something that you're open to? Do you have the risk appetite for that? Things like that are very important. Lastly, understand the difference between a broker and a lender. I'm not going to say anything on that. We're going to do that as our Did You Know segment next week. So I'm sorry for the cliffhanger, but we're going to go and discuss what the difference is between a broker and a lender next week on the episode. The final thought here is that a mortgage advisor isn't just someone who gets you a loan. It's someone who gets you. A mortgage advisor is not someone who gets you a loan. It's someone who gets you and supports you in your goals. They should be your advocate in the process. They should be your quarterback to help with communication because there's a lot of parties involved. And they should do so in a caring, compassionate, understanding manner. So those are my tips and tricks for finding the right lender.